Good morning, everyone. I thought I'd start off the day with a live recording because I really want to thank you for sending through your questions and, touching base and wanting to know what's going on with the industry at the moment. So today I want to touch on the Banking Royal Commission because I watched it on Monday, and then for those of you, if you didn't listen to my webinar on Wednesday, you might want to just jump on this on my feed. I've got the recording there for you to watch again. But I went through it in a lot of detail, and I think it's important because of what's being said in the media, what commentators are talking about. Some of it's actually kind of really making me angry. And I want to talk about it some more because I don't think everybody fully understands what's happening. And I've been in constant conversation with my with mortgage brokers, with business advisors, all of that, trying to kind of get a handle on all of this. And right now, with the media having an absolute frenzy, a lot of people are running scared, and I'm not surprised, and I don't blame you. And really, what I want to try and do today is, I guess, give you some more information, another perspective, and hopefully calm some emotions out there. Even though I must admit I'm getting a little upset myself, only because of people's stupidity. So look, in a nutshell, so if you haven't watched my webinar, like I said, there'll be more detail there, but there are two winners and two losers out of the Banking Royal Commission. Now, the winners are us as consumers. Woohoo! Yay! Finally, the government is hearing that us consumers have really had the raw end of the deal lately with banks, and they're certainly, let's say, their behaviour could be far better than what it has been. So, for us consumers, that's great. It means that banks now are going to be held a lot more accountable. It means that the industry is changing, and since the Royal Commission commenced, and all the findings and things have been coming out of the woodworks, a lot of changes have been happening already over the last 12 to 18 months. As things have been coming up, the banks have actually been implementing a lot of it. So that's good news. The other winner, I think, is banks. Look, I think the banks are going to come off scot-free. I think the banks are going to get away with it. And you know what? If there's ever a time I'd like to be proven wrong, this would be it. I think the banks are, I hear what happened with NAB Bank. They've suspended shared trading, and they've gotten rid of their CEO and chairman and what have you. Are they going to be prosecuted? Look, while the 15-minute media frenzy goes on, it might, but I don't think so. So let's see what happens. I'll be watching it closely. So they're the two winners out of the commission. The two losers are mortgage brokers and healthy competition. And let me explain why. So of the 76 recommendations that the government has agreed with, the mortgage brokers have been hit the hardest. And I just can't understand why. Now, they've taken away Trail Commission. Here's the thing with that, and what some commentators aren't fully understanding. There are 20,000 brokers in this country, 20,000 small businesses. To annihilate that industry would annihilate or impact on 20,000 households. Not to mention all the support services, not to mention all the insurance companies, aggregators, all the other people that work with to support mortgage brokers. They're all going to be impacted. And so firstly, by taking away Trail Commission ending next year, what that has effectively done is it's devalued their businesses, because a mortgage brokerage is actually valued by its trail. So if you take the trail away, it's a bit like a real estate agent. A real estate agent business is valued by its property management arm. That's why so many of them have property management. The rent roll is the value of the business. Well, similarly with a mortgage broker, the trail is the asset to that business. They've just taken it away. And so I'll be interested to see what the fallout of that will be. And so there's a lot of talk amongst brokers right now. They're all panicking around, holy moly, You know, some people have bought franchises, some people have, you know, spent years building up businesses and what have you, and, you know, overnight their businesses have been devalued. So that's a real shame. The other thing also is, you know, there was some discussion around in 3 years' time reviewing the upfront fees. So they're wanting to move from the banks paying brokers to us consumers paying brokers, so fee for service. Now, in principle, I'm really good with that. You know, it's like if I go to my accountant, I pay him for the service he provides, the same with my solicitor, the same with the doctor. Wherever you go, you pay a fee for the service. However, if the mortgage brokers are not paid by lenders like they currently are, that means us consumers will be paying somewhere between $3,000 and $5,000 for a broker to find us a loan. Now, for me, for example, I have lots and lots of loans. If I wanted to refinance, you know, that could end up a very expensive proposition. And so for average consumer out there who just wants to buy their own home or buy one investment property, chances are you're not going to want to pay $3,000 to $5,000 for a broker to find you a loan unless your particular situation and circumstances and strategy kind of cause you to go to a broker. So more than likely you'll go straight to a bank, which is logical, you know, fair enough. So that means most consumers, it's fair to kind of extrapolate this out and say it's fair to say that most people are going to go to the banks. We're going to go direct to the banks to save ourselves that kind of money. So if the banks are not paying trail and if they end up not paying upfront fees, they become more profitable, don't they? Well, a whole lot of brokers end up suffering in one form or another. Some will go out of business, some will go, oh, this is just too hard, I'm out of here. Now, here's the flip side to it all. If we get rid of brokers, banks like ING that exclusively use brokers, what happens to them? You know, what will happen to those online banks that don't have branches? So that'll be an interesting scenario. But then if we go into a bank now to deal direct with their lending departments, you see a broker has to be not only tertiary qualified, has to have a valid license, has to have insurance, has to be a member of the Ombudsman, has to be a member with an aggregator, and as part of all of the compliance that has been implemented over the last 12 to 18 months, and I've seen it, there's a lot of compliance. They are legally obliged, when looking for a loan for you, they're legally obliged to provide you with 3 options, 3 loan products. You know, you go, all right, here are your 3 choices. Some may even go 5 choices. Which one do you think you prefer? You know, I mean, they'll give you some recommendations. I think, you know, product 1 is better because of these reasons and because of your strategy and, you know, your goals, etc., etc. But they give you the option and you literally have to sign off on it. That's a legality that they have to abide by. Now, if we're going straight to a bank, is the lending department going to give us 3 options? No. I reckon they're just going to give us 1 option, which is pretty much what they do now, and say, right, this is what we can do for you, and kind of have a one-size-fits-all, or at least a limited size-fits-all. Are they going to be tertiary qualified? Are they going to be compliant, just like brokers? Are they going to be, insured individually? Are they going to be members of the Ombudsman? Are they going to be members of, you know, the associations, MFAA, FBAA, etc.? Are they all going to be accredited, etc.? Or are they just going to be salespeople for the banks? Well, you know, that's a scary thought, because I don't think so. Because at the moment, you go in, they'll, you know, the lending department or the sales people or the customer service people will try and sell you an insurance product, a credit card, a bank account, a loan product. And basically, at the end of the day, they write and go, right, I've made my quota for the week or the day. Responsibility, out the door, not my problem. Whereas a mortgage broker is now liable for putting us into the wrong product. They are liable for getting it wrong. Now, with every industry there is, whether it be medical, whether it be financial services, whether it be housing, you know, you'll always get dodgy players in every industry. And I applaud the government for trying to clean up the financial services industry. However, the concern is I really feel that mortgage brokers are the fall guy for the banks. You know, I'm a conspiracy theorist. I reckon the banks are going to profit like you would not believe from this transaction, you know, and from this Royal Commission. In fact, during the GFC, if you remember, banks like Bank of Melbourne were bought out by the banks. You know, you know, all the banks went shopping and bought out all the smaller banks. And I reckon that's going to happen again. But the ING banks, the online banks, were probably going to be the consequence of this. You know, the banks will go shopping and buy them all out. You know, I hope that doesn't happen. You know, I'm just kind of following a line here of consequence of what might happen should this proceed and go ahead. And at the end of the day, if we are then left having to go to banks to get our mortgages, they've just killed off competition. It's the mortgage brokers that actually give us the opportunity to have healthy competition. You know, and one of the things I love about my broker is that, you know, when I ask for a loan, I know that you know, they're going to look at all the different lenders out there. They're going to look at all the different types of products, and they're going to marry it up with my strategy and what it is I'm looking for in my circumstances. Whereas a bank can't do that. You know, funnily enough, you know, I don't have a loan with CommBank, for example, because I don't fit into their box. So if I'm limited to some of just the four majors, for example, you know, I'm self-employed. So therefore, I don't fit into a box quite nicely. They can't just tick boxes with me, as they can't with a lot of other self-employed people. So, you know, everyone's circumstances are different, and we need the competition. We need all the different types of lenders. We need, you know, non-conforming lenders, and as well as your four banks. You know, you need your two tiers. You need the different lenders in order to give us options so that we can, you know, continue to build our property portfolio. So that's my little thing about the Royal Commission. You know, I hope that, you know, I feel like they're overcompensating, and I have some, you know, issues with what the government is doing. You know, the government said, look, we're going to implement all 76 recommendations. Well, great, but of course they're going to say that. We've got an election coming soon. They're going to try and be amiable and amicable and keep the Australian public happy so that we vote for them. Okay? Now, whether you vote for Libs, whether you vote for Labor, you know, it makes, some days I go, there's no difference, right? And we're probably all on the same page with that one. It's, you know, yeah, no difference. However, you know, I guess it's just this short-sightedness that I'm really frustrated with. They're just trying to win an election, not really trying to do the right thing. And if they implement all 76 recommendations, I think it could have devastating consequences on our whole economy. You know, APRA and the Royal Banking Commission alone have done a tremendous amount of, well, they've had a massive impact on the property market. You know, just by changing the rules, adding in additional legislation and what have you, to have the government now, and this guy Hayne, who doesn't understand mortgage brokering, by the way, because if he understood it, I don't think he wouldn't have made the recommendations in the way that he did. However, you know, I feel like APRA and the Commission have done enough to cool off the market. You know, investors are running scared. There's blood on the streets and people are panicking. Property prices are falling. Then if Labor come in, and here's my prediction, I think Labor are going to get in. They're going to then tweak negative gearing even further. And, you know, the Libs have already tweaked negative gearing. So it's kind of like they're stacking the odds against us right now. But you know what? If you watch my webinar, I talk about downturns and recessions and how long they last, and I go through all the different tips around how to manage that. So if Labor gets in and makes changes to negative gearing even further, that's just going to quieten the market even more. And so for all my clients out there, we're going shopping, all right? Hear me, we're going shopping. We're going to make hay while the sun shines. It's just really formatting that strategy and nailing it. So, you know, and one thing I'm really happy to share with you all, my broker last year alone got 94% of loans approved, whereas industry standard with brokers right now, only 60% of loans are getting approved. That means 40% are failing, are being declined. It's a scary number. So it's because they're not really educating their clients enough with what the lenders are looking for, so you line up your financial ducks. So I know myself, if I was ready to buy right now, well, I'm not right now, I'm planning for the next 3 to 6 months, that I'm already starting to line up my financial ducks, whereby I'm looking at my spending habits and what's on my credit card statements, where I withdraw my money, all that kind of thing. Very careful. Doing a bit more with cash these days. And when I do a shop once rather than doing lots of little shops. And just things like that are really making a big difference, because, you know, my broker is telling me what the assessors are looking for. And so I'm going to be sharing all this kind of information with you. In fact, I shared a lot of it on my webinar. So again, just go to my page, Facebook page, because the webinar link is there and you can watch it for yourself, or I go into more detail. But really, guys, the fact of the matter is, you know, I hear the concerns, I feel your frustrations, but don't let it stop you. You know, now's the time to really have the guts to turn around and face that march. You know, go against the crowd, march against that crowd, because this is where we're really going to reap the benefits. And, you know, and as Warren Buffett says, you know, you buy when everyone's selling. You know, you sell when everyone's buying. That's how you make a hell of a lot of money, not only in shares but in real estate as well. So getting an education, which is really important, will help you with that. You know, guys, we're watching the market all the time. You know, I'm reading the newspapers, I'm making comments, I'm writing articles, doing all of that stuff, watching it constantly. So I feel like, you know, the team and I are at the cutting edge of what's happening and are really helping clients get ahead, especially for this year and next year. All right, so we've got a 2-year window. Let's make the most of it. Okay, so let me answer a couple of questions. All right, so one is from Andrew. Andrew says, hi Helen, the main question in the current lending climate is finance. Okay, great. And he says, we put in an application for $300,000 to purchase a block of units with a 10% return. Well, that's really good. And he says, I'm buying it in a unit trust with P&I fixed interest for 2 years with a 40% LVR. And he says, and we were refused and it didn't service. And he said the service test was done at 8% P&I. And he says, and I'm hearing this is common now. Thoughts? Well, gee whiz, Andrew, that should have been a slam dunk, mate. You know, quite frankly, I don't know who you used, whether it's a broker or not. But let me tell you, my broker said to me just the other day that they were talking to a lady who went to 4 brokers. So she was an investor. She wanted to access some additional equity in her property to be able to go again and prepare herself for buying this year. And she went to 4 brokers, and 4 brokers said, nah, there's no way you're going to get a loan. Well, she came to my broker. Not only was she able to get a loan, she got pre-approval for 2 new purchases. You know, yeah, well, what am I going to say about that one? So Andrew, I don't normally do this, but my broker is Blue Ink Finance. Give them a call and let them have a look. Unless there's something really extenuating about your circumstances, that should have been a slam dunk, in my opinion. Okay, so Narelle says, are the banks still allowing interest only for investments, or are they only approving P&I loans? Well, Narelle, good question. Yes, you can get interest-only loans, but the interest rates are crap. It's kind of like they're forcing us to go to P&I, and you know, and I don't like the fact that now you can have an interest rate for your owner-occupier that is often lower than that for investment purposes. So, you know, sharing my own experience, I came off a fixed interest only rate just late last year. I had several loans come off at around, you know, somewhere between the 5.19 to 5.39, and I renegotiated all those interest rates to 3.95. So it went from, sorry, did I say 3? Yes. Okay, let me just say that again because I think I confused myself. Interest rates, though, so I had interest only fixed for 5.19 to 5.39, renegotiated it down to 3.95. So it was a huge saving to my cash flow. Overall, even though I'm paying P&I, I was, you know, kind of better off. So guys, don't be so concerned about P&I. And don't be afraid to go back and renegotiate with the lenders. Because here's the thing, they're in the business of lending us money, aren't they? That's how they make huge bloody profits. So if they're not lending to us, they're not going to make the profits that they're looking for. So don't be afraid to go back and say, well, hey, I want to renegotiate my interest rates, otherwise I'm taking my business elsewhere. And that's pretty much what I've done. That's what I'm saying to all my clients, guys, you've got to renegotiate. And if you don't ask, you're not going to get. Okay, so I think I've taken up enough time. Thanks, guys, for listening. And again, over the next coming days, I'm going to answer some more questions. If you've got any questions, post them in this chat and I'll get to them as soon as I can. Thank you for listening. Have a great weekend.